Hey guys, can everybody hear me loud and clear? Let me know in the chat. Hope everybody is doing well and can hear me loud and clear. Welcome back to another stream. Everything should be working properly. If it's not, let me know and I'll be here to help. Fantastic, guys. Glad that you can hear me loud and clear. Good to know. Okay, welcome back to another live stream here on the channel, guys. Good to be here. As always, today's going to be another valuable session. As you can see, my face is still a little bit big. Main reason why is because okay, fantastic. It's because I'm going to be doing another presentation here on the stream, guys. So obviously last week there was no presentation. My apologies for that. I was traveling, but we are back stronger and better than ever, obviously. So we're going to be doing a massive presentation today, going over some positions, some trades, and some fundamentals on how I analyze the markets and how you can pretty much just do the same. So I'm going to be going over the key fundamentals that I look at on a specific position that I'm currently in. I'm going to be breaking the position down for you guys so you understand exactly why and how I trade. So I'm going to give everybody just one more minute to tune into this stream, and then we're going to get it started and we're going to get this show on the road. Super curious, first of all, to hear where everybody is from today, as always. So let me know in the chat, where are you tuning in from, guys? What country, what continent, where are you in the world? I know we have viewers from all over the world, but it's just always nice to hear where everybody's from. Obviously, myself, I am based in Amsterdam, as you can see in the background, nice and Dutch background. But now I'm super curious to hear where everybody's tuning in from. So we are back. Let's see. We have United States in the house. We have Netherlands. We have UK, Australia. We have Nijmegen, which lays in the Netherlands. We have Iran, India, Brazil, Ghana, Argentina, London, Japan, Albania, India, Beirut, Jamaica even. Wow. Portugal, Sweden, Spain, Nepal, Hong Kong. Fantastic, guys. Fantastic. France as well. Germany. Fantastic, guys. Fantastic. Okay, so again, what we're going to dive into now is are the markets, guys, and we're going to dive into this beautiful presentation that I've prepared for you today, which is going to be a fundamentals refresher. We're going to go over the fundamentals and showcase you guys the position that I'm currently in. I'm going to be breaking down the position for you, both from a fundamental and from a technical perspective. So I got a lot of questions about this. Fabio, obviously you have explained many times how to take a position based on the technicals, but we need a trade breakdown that also includes the fundamentals as well, where I kind of like break down the entire position for you, because many times I've broken down a position based on the fundamentals and many times I've broken down a position based on the technicals, but I've never really kind of like done it together in one concrete presentation. So that's pretty much what we're going to do today. So what I want to repeat, and we have our first ban of the day. Sinu, you're spamming gold in the chat, so you are going to be put in a timeout for the upcoming 24 hours, my boy. Okay, guys, so no spamming the chat, please. Keep it respectful, as always. Understand that if you have a question, I'll get to it. There's no reason to just spam your bloody pair in the chat as well, because I'm not going to look at it even, because we're going to dive into, first of all, the educational part, and then after that, we're going to have a look at the individual positions themselves. So we're going to dive in. What I want to let you guys know is that if at any point in time you do have a question, let me know in the chat. Just post it once and I will go over it. As soon as you post it twice, 3, 4, 5 times, you're just going to get an automatic ban in the chat, so you can't post any more messages. Big shout out to all of you taking the time to be here today, and let's dive straight in. So we are here, guys, on the fundamentals refresher. So first of all, why do we use the fundamentals, guys? Very important to understand. So most traders react to charts without understanding why price moves. Often I hear people, hey, price is expected to move from this Fibonacci level, from this supply and demand level, from this support and resistance level. And obviously to a certain extent that can work, but how easy would it be for you if you can just go onto any single chart and understand why the overall bigger swing in price is actually taking place and how you can actually capitalize on those larger movements of 2, 3, 4, 500 pip movements, okay? So that's what I'm going to explain today, how you can do these fundamental analysis, okay? So first of all, smart money trades based on macro fundamentals. And this webinar breaks down the core fundamentals moving our currencies that we personally trade, and obviously also commodities or even crypto. Now, the goal is to give you the tools to read the market like the institutions do and how myself also do, okay? So, first of all, interest rates, guys. And I want you guys to take notes. I want you to understand what I'm explaining here, because every single slide itself individually kind of like compounds into one larger and bigger picture. I don't have a pen here to write on my chart at the moment or on this presentation at the moment, but I need you to understand that what you need to write down is number one, interest rates. And interest rates are the king of Forex. Interest rate differentials being more specifically. And again, write these things down. If you don't understand what I'm explaining, you can always go to ChatGPT or you can ask here in the chat today. So, interest rates drive currency strength and yield attractiveness to a specific currency. All I want you to understand is that central bank rate hikes will cause for currency inflows and will cause for a stronger currency because of increased demand. So currency inflow, all you can very simply say is just more demand causing a stronger currency, okay? And a rate hike very simply just means increasing interest rates. Central bank rate cuts, so decreasing interest rates, this will cause for currency outflows and will in turn cause for a weaker currency because people take their money out of that specific currency. Very simply said, if the US dollar has an interest rate of 5%, then what happens? Currencies flow in. If the US dollar starts to get a lower interest rate, capital is very likely to flow out of the US dollar and cause for a weaker currency. Now, very important, the market moves based on expectations. So, for example, if you look at the US dollar in 2022, it surged due to expected Fed interest rate hikes. And we can see that overall the dollar made a massive boost into 2022. Now, this interest rate hike only took place in March 16th of 2022. But the market was already pumping as of the 1st of January, because here we can see this blue line over here. This was around the 1st of January, and you can see that the market started already pumping as the expectation was that that rate hike was going to take place. And as we can see, that rate hike indeed took place on March 16th of 2022. Okay, guys? So this is extremely important to understand, that the market will move based on the anticipation of those rate hikes, okay? Now, inflation. This is the second major one that I want you guys to understand. So inflation forces central banks to act on interest rates. So a high inflation means that there is a hot economy. Everything is becoming more and more expensive. So what does the central bank do? It provides us with higher interest rates, because higher interest rates, again, in turn, will make a currency more attractive, which will in turn again cause a value increase. Low inflation means that there is a slow economy. And when there's a slow economy, what will the central bank do? It will lower the interest rates, and this will boost consumer spending in a country. However, this will cause the currency to be less attractive and will most likely cause for it to devalue. Now, furthermore, what are the different types of inflation that we look at? We have CPI, which is consumer inflation. We have core CPI, which is consumer inflation, excluding food and energy. And we have PPI, which is producer inflation. And the market reacts to inflation surprises versus expectations. So always look for surprises in those inflation numbers. Then obviously we have employment. So employment is kind of like the third one that we want to look at. This is, for example, NFP numbers that come out. And when we look at employment, this signals economic health and the overall spending power. So what you're looking at here is key data, as we all know, NFP, right? So a strong job growth usually leads to rate hikes because it provides us with a signal that the economy is hot. So remember what I was mentioning here, that when we have high inflation, we have a high economy. or hot economy, excuse me, and we expect higher interest rates. So when we have, again, strong job growth, this usually leads to rate hikes because there's a hot economy and a lot of people are getting those jobs and everybody's spending a lot of money, right? So this causes inflation to accelerate, and then in turn, strong investor confidence causing a currency to appreciate in value. Now, a good example here is 2023, where we had 1, 2, 3, 4, 5 good NFP numbers after each other. And then we can also see that the dollar index between December 2023 and May of 2024 here on the daily time frame, increases in overall value, okay? Important to understand, the NFP numbers are obviously not the only thing that are going to be pushing the price up. It's kind of like everything coming back together. What is NFP? What are the NFP numbers coming out at, and how are these going to potentially influence interest rates, and how is the relationship again in turn with, for example, inflation numbers? But this is number 3. So we have number 1, we have the interest rates. Then number 2, we have the inflation. And then number 3, we obviously have the employment. Now, number 4, guys, is going to be surveys. And these are just very simply said, leading sentiment indicators. So what is the sentiment inside of an economy? And that's what we use these surveys for. So we have 4 different surveys that we monitor, more specifically on the US dollar. These are the 4 that we monitor. We have the manufacturing PMI. This measures the factory activity. Strong numbers suggest economic expansion and currency strength. Then we have the services PMI, and this measures the health of the services sector. High readings signal a robust demand and support the currency again. Then we have number 3, which is the building permits. This is an early indicator of housing and construction. A rise in permits reflects growth optimism. So building permits is a very good and early indicator always to look at, and something that a lot of big banks use, because if a certain amount of building permits are issued, this means that in the future, when the houses are finished, we can expect there to be an X amount of houses built, right? So what a lot of people look at, for example, in an economy is, okay, how many houses were completed this year? For example, right? Let's say in 2025, Q1, how many houses were completed? Oh, the number is high, so this is good. But what people don't understand is that this is very lagging, because what you want to be looking at are the building permits. How many permits right now are being handed out? Because that's how many houses most likely are going to be finished in, let's say, 2 or 3 years' time. So this is kind of like a leading sentiment indicator. And then we obviously also have consumer sentiment. And this captures the household confidence. And again, a stronger sentiment leads to higher spending, and higher spending leads to higher inflation. And higher inflation leads to what? Higher interest rates. And higher interest rates lead to what? To a stronger currency. As simple as that. So here, one more thing about, for example, CSI, so about the consumer sentiment. A sharp drop in consumer sentiment often triggers a risk-off move, weakening risk-sensitive currencies such as the Australian dollar, the New Zealand dollar, well, the pound not necessarily has to be inside of here, but mainly the Australian dollar and the New Zealand dollar, and it then strengthens safe havens, which are traditionally speaking the dollar, the yen, and the Swiss franc. Mohammed is asking if we can get this PDF later. Yes, you can. So I'll share this inside Discord. The link is in the description of this video. Now, for example, during the 2022 inflation surge, falling US consumer confidence weighed on risk assets and boosted the overall demand for the US dollar. So you can go back to 2022 and you can see that the consumer confidence was falling, and that risk assets overall got hit really, really hard. So why it moves the FX market? Because consumer confidence is kind of going to be a gauge or gauge for future spending. It showcases what we can expect from future spending, and future spending obviously will have an impact on what? On future growth. But also, for example, on the stock market, because if future spending is expected to be less, well, what are the valuations of companies expected, or let's say, what are the future valuation, or what is the valuation of a company, kind of like built on? It's built on the expectation of future revenue. Now, if consumer sentiment is very low, then future revenue for these companies is expected to be lower, because future spending is expected to be lower. In turn, everything is again kind of like intertwined with one another. But again, services is number 4 thing that we kind of like look at, and then these 4 things are kind of like the sub points underneath it. So again, we have number 1, interest rates. Then we have number 2, inflation. Then we have number 3, employment. Then we have number 4, the surveys that we look at, and then we have number 5, So number 5 are the geopolitical tensions / situations. So these are the wars, these are the sanctions, the political instability, the tariffs, and these can trigger risk off flows or risk on flows. Now, I've mentioned risk on and risk off many times. All you need to understand is that risk off is the Swiss franc, the Japanese yen, and gold, and that risk on is mainly the Australian dollar, the New Zealand dollar, and for example, the Canadian dollar. And a risk off sentiment can override fundamentals temporarily. A very good example is obviously what happened back in on the 3rd of April, where we had the tariff situation, right? So we had the tariffs that came out. Then what happens? It doesn't matter anymore what is the case with interest rates, what is the case with inflation, what is the case with unemployment. Nobody gives a damn anymore. The only thing that people care about is, again, what are the current geopolitical situations, and that's what at the end of the day moved the market the hardest. Okay, so this is maybe one of the most important ones, and the easiest way to stay up to date on what the current geopolitical tensions are and what the situations are is simply by going into Bloomberg, going into Reuters, going onto the Financial Times, going onto Forex Factory, and reading about what is currently going on within the world. And that's pretty much just what I do on a daily basis, right? The perfect example is obviously the Russia-Ukraine conflict, where the euro went down and the dollar and the Swiss franc went up. You can see this from February 2022 and onwards. Another example is the financial crisis back in 2008, where the dollar went up, as you can see here on the chart, from September 2008. So the financial crisis was around the 15th of September. You can see that the dollar rebounded heavily in that last quarter of 2008, mainly because, again, when there is risk off in the world, when there's a lot of, let's say, crisis in the world, people tend to put their money into dollars. Now, a real world case study, guys. How do we actually implement this in the current market conditions that we are experiencing from today? Right? This is now the next step for you guys to understand, because I understand it may seem very far from your bed show, but it's actually very simple to interpret and to use in your own trading. So the perfect example of a position that I'm currently in right now is GBP CHF. So I'm currently in this pound Swiss long, a very simple position which I took from the 0.5 fib, which I entered on top of the 0.5 fib together with an area of demand. And why I exactly took it, I'm going to explain again. But you guys who follow the videos, obviously mostly, you'll pretty much have a very clear understanding of how simple this setup actually is and how easy it is to take if you have the fundamental confluences in line as well. Because first of all, what we did here is that we zoomed out onto the weekly time frame. So on the weekly time frame, what I identify is, number 1, a liquidity low. So what I identify is that overall we are trading in an area of consolidation, and we have two highs. We have our swing high and we have our swing low over here. And all I'm pretty much doing is I'm trading in between the range high and the range low. And what you want to be doing is that when the market is consolidating, you want to be looking for buys from pretty much the 0.25% in towards the upside, and you want to be looking for sells from the 0.75 in towards the downside. So what I'm doing here is I'm looking to capitalize on the overall technical momentum that we have after taking out two very significant lows, low number 1 and low number 2. Now, then what I do is I go to the daily time frame, and I understand, okay, the daily time frame is ready to push up higher. Why? Because overall, we're starting to form a daily internal trend here with the push up, the push down, the push up, the push down, the push up, the push down. And I'm just trading, very simply said, an overall uptrend in towards the highs. Now, what's very likely always going to happen with overall news pushes in a certain direction is that news pushes often get mirrored. A good example of this would have to be Australian dollar against the Japanese yen, where this overall news push in towards the downside, which was based on the tariffs, already got mirrored in towards the highs, as we can see. And again, if we look at USDJPY as well, you can also see here that that overall news push, which happened from the 3rd of April in towards the downside, has already been mirrored back in towards the upside. So this is already how you can very easily form a bias. And that is, for example, why I'm still long on GP Swiss, why I'm, for example, still long on an entity Swiss, why I'm, for example, still long on an AUD Swiss, because I'm looking still to mirror these overall downside pushes back in towards the upside, okay? So what I have here on GP Swiss is, again, an overall long position in towards the highs. And then based on technical analysis, it's not rocket science. We have an overall sell for a big buy up, which caused the market structure break. Therefore, this is my demand zone. Then what I do is I simply look at 0.5 fib. And what you can then do is just simply enter on top of that 0.5 fib, stop loss underneath the lows, targeting a new higher high. Now, if that is too aggressive for you, or you don't feel confident enough, then obviously what you can do is you can look at the lower time frame. For example, go to the 1 hour. Then again, simply look for your bullish confirmation in the form of a market structure shift. So let's say we look for the fractal structure shift. Well, here down below over here, we had a fractal structure shift. This becomes your demand, and then you could enter on that confirmation. For example, if you would need any additional confirmation, or you wait for the double fractal structure shift, this becomes demand, stop loss underneath the lows, and then you would already have a beautiful 1 to 3 risk to reward, for example. So as simple as that, that's pretty much how simple it can be. So from a technical perspective, I think it's very clear why I would be in this long position overall. Now, from a fundamental perspective, because again, we take the trades in combination between the fundamentals and the technicals. From a fundamental perspective, there are a lot of reasons. Now remember, I mentioned all of the things, right? So we had inflation, we had interest rates, we had unemployment, and we had the surveys, right? And then we had the geopolitical tensions. These are kind of like the 5 main things that I tend to look at. Oh, here, number 1, inflation falls to the lowest in nearly 4 years. Now, remember what I mentioned about inflation. Low inflation means a slow economy, means lower interest rates, means a less attractive currency, means devaluation. Okay? So now I go back. Inflation falls to nearly the lowest point in 4 years. So that's number 1, why I was expecting a weak Swiss franc. Then number 2, the Swiss franc surge sparks bets on return to negative interest rates. So again, negative interest rates. Central bank rate cuts means currency outflows, means a weaker currency. Again, very, very simple. When we look at the potential negative interest rates, what happens? We expect a weaker currency. Well, the perfect example of this would have to be USDJPY, guys. USDJPY, what happens? Interest rates in the United States have been high. Interest rates in Japan have been negative or near zero. What happens? People borrow money for free in Japan and they invest for 5% in the United States. As simple as that. Okay, now next one here. G7 finance leaders try to downplay tariff disputes and they find a consensus. So over the weekend, what was said was that the G7, right, so the biggest countries in the world, were looking to downplay the tariff disputes and find an agreement. So again, the overall geopolitical tension, the overall geopolitical risk that we are seeing in the world is starting to reduce, it's starting to become calmer, right? So very, very simply said, the geopolitical is now also in favor. Then again, over here, if the Swiss National Bank is unhappy with the strong Swiss franc and constrained on FX interventions, lower interest rates are the only option, said this FX strategist at ING. Furthermore, this guy, Steven Gerlach, chief economist at EFG Bank, said negative interest rates may well happen, adding that currency intervention could also be necessary. So again, implying that there's going to be lower interest rates. Well, what do the lower interest rates mean? Again, lower interest rates mean currency outflows, mean a weaker currency. Now, what again you need to understand is that the market moves based on expectations, not on the bloody number coming out. So you need to be early, guys. You don't need to be waiting for the fucking interest, sorry for my language. You don't need to wait for the interest rate to be cut. You need to be there when the expectation is there that the interest rate is going to be cut, because that is when the real move is going to happen and where the money is going to be made. So we are always trading in line with the expectation and not based on the number itself. So that. And then again, if we look at the pound recently had a lot of good news come out. Inflation higher than expected year on year. This is year on year inflation. So this number comes out once a year. So consumer inflation year on year comes out 0.2% higher than expected. Well, again, what do we remember when we look at inflation, guys? When we look at inflation, what do we remember? High inflation means a hot economy, means higher interest rates, means more attractive currency, means a value increase. Okay, so as simple as that. Then we look at retail sales. Retail sales come in higher than expected. So what do people expect? People see that more sales are being made. People see that the economy is hot and that interest rates are therefore expected to be high, because retail sales, when a lot of sales are being made, it likely will imply that inflation will be high as well, which likely implies, again, that the currency will be strong. Then we look at GDP, month-on-month growth, also coming in higher than expected at 0.2% higher than 0% itself. So again, showing that the British economy at this point in time is strong, and further showing us and helping us push the pound up higher, and yeah, causing GBP Swiss overall to buy up in towards the upside. So this is the yeah, thanks guys, I appreciate that I can use the language. This is the perfect example of bringing it all together, right? On one side we have the technical aspect, which here was very, very clear, and then on the other side we have the fundamental aspect, which shows here a bullish Great British pound. Boom. We have geopolitics in our favor. We have lower interest rates or even negative interest rates, which are likely. And boom, we also have inflation falling to nearly the lowest point in time. So this is how you bring it together. And obviously, if we look at the overall Swiss chart here of GBP Swiss, like a lot of traders might be looking for potential short position. If they, for example, say, okay, let me draw in this Fibonacci retracement tool over here. Here I see 618 fib. Here I see kind of like a bearish gravestone whatever pattern. I put the stop loss above the highs and we target a new lower low. Like this is how a lot of traders, or they would put the stop loss here, whatever. Like this is how a lot of traders could potentially could approach this setup. And how people still approach the setup, right? They see here like a support and resistance level, and they see the bearish confirmation, so they're ready to go short. But we then understand, okay, we're not looking for short because one, obviously we have the fundamentals, which we just all mentioned, and which we just went over in our favor. And then number two, we have the internal trend overall, playing out in our favor as well. So the overall bias from a fundamental perspective is then obviously long. And then when we look at the technicals, we can obviously also see that the internal trend is still bullish, and therefore never in my mind does it come up, oh, I want to be the early seller. No, I'll just continue buying it until, for example, we break this low again, and then you get out and then you just wait for the bullish confirmation again. Or then you wait for this low to go, and then you see, okay, maybe the fundamentals change, and then we get into some shorts again. So that's how I'm approaching the market, and how we kind of like use this all together. And on one side we have the fundamentals, which align perfectly, and then on the other side we obviously also have the technicals, which align perfectly as well. So if you found this useful and you want to get personalized feedback on your trading, guys, what you can do is you can just scan the QR code and you can fill in the questionnaire. And what we'll do is myself or Rutger or Tyne are going to review the way that you trade and see how we can help you in the best way possible. So what you can do is you can just pause your screen here. You can scan the QR code. A bonus will also be that you receive free daily fundamental checklist for all the people who take the questionnaire. So I have like a free kind of like cheat sheet that I use, and I'll share it with you guys as well. I'll be sharing it also with all the mentorship students inside Discord as well. But yeah, for anybody who also takes the questionnaire, you'll receive a free fundamental checklist. So yeah, feel free to pause it and to fill in the questionnaire. And that was pretty much the presentation for today. So I want to thank everybody for taking time to listen to the presentation. I see that we have around 600 viewers. I hope everybody got a lot of value from today's presentation. And if you have any questions, now is pretty much time to ask in the chat, guys. So let me know if there's any questions, and here to help. And don't just drop USDJPY, please. Drop some more information, guys, on what you're actually looking for, what actual questions that you have, and how I can potentially help you answer those questions, okay? So that's, so thank you everyone for being here. And now let's dive back into what everybody loves doing the most, which is obviously looking at the charts. Okay, Fabio, if the Bank of Japan increases their interest rate, will the carry trade be less attractive, which will result in a less attractive yen? Yeah, so if the Bank of Japan increases their interest rates, the carry trade will indeed be less attractive, because what is the carry trade? Well, what people do is that they borrow money in Japan and they invest it in a higher yielding country. But if the Bank of Japan increases their interest rates, it makes the Japanese yen more attractive to put your money inside of. And in turn, it will cause the carry trade to be less effective. And therefore, people will start buying the Japanese yen, and the Japanese yen should become a little bit stronger. Have you taken a long position on your USD? No, I have not. Thanks for the presentation. Thanks for being here, Julius. Appreciate it. What do you do with school and Forex? I haven't been in school for a very, very long time anymore. But if you need any tips, let me know. Yeah, don't forget to put a like on the stream, guys. Would really appreciate it if you could just leave a like. It just really it just takes 1 minute to leave a like on the stream. If we can get at least 300 likes, that would really say a lot. While trading, do you expect the trend to at least touch the 0.5 Fibonacci retracement level, or do you prioritize supply and demand zones? We always prioritize market structure, guys. Market structure is always the number one thing. So as long as, for example, in this example here, we get the push up, push down, push up, push down, push up, push down, push up. Like in this example, market structure is extremely bullish. So there is no sense in shorting it. Despite there, for example, if there was like a supply zone, I wouldn't even be interested in a short, because you always need the overall confirmation that your supply demand zone is actually going to push price in a certain direction. Now, a good example would, let's say, be over here where we have, for example, this buy before the sell supply zone. Like myself, I would never just simply take a short position based on this bearish candlestick with my stop loss above the highs here, right? So here you have, let's say, this Fibonacci retracement. You place your fib in, you have, let's say, 618, and then you have this supply zone. Like here you cannot short yet because the overall fractal low is down below over here. So what you see happening is that the market kind of like pushes down in towards this demand zone, right? And then just heads up higher again and then consolidates. And then obviously it turns into a range. So then supply and demand doesn't become as effective anymore. But that's how you could have like prevented yourself from being in this overall position that you would have taken over here, and which would eventually have hit your stop loss. Can you explain the whole situation with Japan crisis thing going on? Julius, could you kind of like maybe clarify a little bit what you mean with the Japan crisis thing going on? Are you referring more specifically to Japanese yields going up and obviously the depth in Japan being very, very high, and then with the overall yields going up as well, as becoming a tricky situation because Japan has such a high depth that financing all of that depth with higher interest rates is going to be an impossible task. But I'm getting a little bit too technical now, I think, for a lot of people, so I won't go too much into it, but I think that's what you're referring to. Hi, Fabio. Do you differentiate between a breakup structure and a liquidity sweep? Yeah, liquidity sweeps happen within market structure itself. So let's say in this particular example here, this is my overall swing high up over here. This is my swing high. This is my swing low. This is here is a liquidity high. This here is a liquidity high because these are little bumps in the road. Okay, so above these little bumps in the road, that's where liquidity lies, and that's why you can see as soon as you come above that high here, right, you straight away see a push down, and then eventually after taking out the liquidity, then the market structure kind of like continues in towards the downside. So the market structure was king, and within that market structure, so within this high and this low, you have little liquidity highs where you grab liquidity. So that's all you kind of like really need to understand how to trade this. Yeah, I'll definitely be sharing the presentation with you all, but obviously you can also watch back this presentation as well here on YouTube. How long does your mentorship class last? So the mentorship itself lasts for a minimum period of 6 months, because obviously I need quite a long time to kind of like bring across all of this information for you guys. And it's really a commitment where we commit ourselves to you, but you also commit yourself to us. Do you sell signers? Not sure what a signer is. I think you mean signals, but no. Hi Fabio, what platform do you use to get the news fundamentals? Guys, okay, so what we use pretty much, very simply said, is number one, we use Bloomberg. So Bloomberg, let me just put it like this. Number two, we use Reuters. Number three, we use the Financial Times. Number four, I use Forex Factory. And number five, I use X. And X is very good if you follow the right people, because that's where you get information the first. Information on X kind of like comes out, let's say 10 hours before it comes out on Bloomberg. So you better be on X, because that's where you kind of get first access, primary access to all the news around the world. What else? Guys, if you missed out on the link, you can obviously also sign up here in the chat. I dropped the link in the chat as well. Do you ever look at things like the COT report? Yes, we do. What is the indicator you use for the fractals? It's a private indicator, Bob. we're going to be releasing it very, very soon. Who do you follow on X? Guys, I'll be sharing my follow list very, very soon with you guys. I'll be happy to share it soon. The dollar is pushing down again from that daily supply zone. So a lot of you are asking, Fabio, can we short EURUSD yet? Or long EURUSD, excuse me. So yeah, now obviously here on EURUSD, we tapped into that daily area of demand. Now with this daily area of demand, there's potential for it to push up higher again. Kind of been looking at this dotted line here as the liquidity high. So looking for this to obviously push up kind of like another, let's say 100 pips exactly from that demand zone. Now the ideal way how you want to approach this is obviously with a demand zone being created. Now the thing here is with your USD that to me there is no area of demand here to my left, so there's no kind of like real easy long to take. So now what I'm looking for is for another push down, kind of like continue with this down until I see a real market structure shift, because for now you need to break this high over here to get a market structure shift to confirm that this is demand to then go long, because here there's no demand. So you need to create demand in order to go long. So now I'm waiting for demand to be created for going long. So that's why I would prefer another sell-off, because then we can get in from like better levels, because if you get in over here you're kind of like pretty much at the break of structure line already. So that's not ideal. So that's why I would prefer to see it push down a little lower, EURUSD. Looking at the dollar, so the dollar did actually provide that fractal structure shift, as you can see. So this is kind of like what I wanted to see on EURUSD. So here, fractal high break, fractal low break. So you pretty much can see here, and that's why this indicator is so bloody sexy, is because look, the buy up for the sell down, that's now supply that is in control. Look at this. So for now, what you would expect from the dollar is that this continues down lower and eventually takes out those equal lows, right? So that for now makes sense from a dollar index perspective. The only problem is that your USD is not playing ball, in the sense that it's not complying with the rules. So that's why for me not valid to take yet. I would need to see that. AUDUSD is a nice one. AUDUSD is currently inside daily demand, obviously, with an overall bullish trend, and me looking to take out this dotted line / the X. So looking for that further upside on this. Yes, guys, I get a lot of questions about scammers. Guys, I don't kind of like send DMs. My name literally does say Fabio will not DM you. So if you get a DM from me, it's obviously going to be a scam. So that's that. So here on the daily, looking for this to obviously continue up higher from the daily demand. Looking at this on the 4 hour, makes sense, because 4 hour demand is pretty much this imbalance candle over here, this kind of like hammer candle, imbalance candle, so that could push the market up higher. 1 hour time frame also looks ready in the form of the fractal structure shift. I mentioned this morning on the outlook. So yeah, this is now demand that is in control. So now get the tap in and then maybe just buy the high break of AUDUSD, something like this. Yeah, that could be nice, and then target the overall high again. So that's a nice potential trade for you there on AUDUSD. Then USDJPY. Yeah, so UJ looking for longs with the Japanese yen being weaker. Overall, UJ is just a little bit ugly, but looking at this 4 hour, I do kind of like it. So I would be willing to get into another long, waiting for accumulation to happen, and then I'll just get in on the next high break, maybe tomorrow morning, because UJ often doesn't always retrace all the way back down into towards this demand zone. Especially with these yen pairs, you need to be a little bit more impulsive and just get in on the overall momentum. So keep an eye as soon as kind of like the 1 hour has completed its retracement. Just look to get into some more longs myself. Japanese yen is weak at the moment. Main reason being is because of this. So Germany ends Japan's 34-year run as the world's top creditor nation. So this is currently causing the Japanese yen to devalue. The shifting in ranking reflects Germany's substantial current account surplus or surplus and strong trading performance, while Japan's assets continue to rise but at a slower pace. So this is worrying because Japan has the largest debt in the world. So now with this happening, people are starting to lose their shits a little bit, I think, with Japan. I haven't read the full article yet, but I'm going to need to read it a little bit more. So yeah, keep an eye on this. Okay. So that's why the yen has been devaluing, and why I still see potential for UJ to push up higher. Same for GJ. I think a lot of people have seen GJ rise. It manipulated a little bit more than we wanted to see, but still kind of like this demand zone over here, push it up higher. Who was there in the last stream where I think we mentioned, actually I think this was on Discord on last Wednesday. Yeah, this was on Discord last Wednesday, where we talked about this demand zone, and we said, Samir, I'm not sure if you're here, bro. Samir from France, guys. My brother, he was here with the TTA meetup as well in Amsterdam, but we had this demand zone, and we were saying this is like a very clear fake demand zone, and you can see it swept the demand zone low, and then the reversal happened. So very happy to see this. Hope some of you were able to capitalize on some GJ longs as well, because yeah, we talked about this, and yeah, it's great to see. So yeah, some beautiful price action. Obviously this sell for the buy here, pushing the market up higher. So I hope some of you you were able to get into some longs. Yes, Samir, you're here, brother. You said demand is just demand. I'm not sure if I'm referring to this chart, but I was saying this demand zone looks like too demand zone-ish. It looks too fake. Everybody's looking to trade off of this. Obviously, with it being a support and resistance level, with it being like the perfect demand zone, everybody is getting into this position with the stop loss here. So you see all of the stops get hit, and then the overall reversal happens up higher. So it was a perfect yeah, example of like a setup that you want to stay out of. Overall, looking at the daily, yeah, just a beautiful liquidity sweep as well here. Let me see, the high of this is 473. Yeah, so it was correct. Okay. So the best way and the easiest way to understand that it's a fake demand zone is obviously to understand that there needs to be liquidity. Now, overall in this kind of like push, to me, there's not really any liquidity. Kind of like the only liquidity low is pretty much this low over here, which you could see as a liquidity low. But then obviously the market comes into this demand zone. Does it come in with momentum? No. Does it liquidate anything here to the left? No. Some of you might see this as a liquidity low, but you can see there's not even any reaction to it. The overall bearish momentum just continues. And then you see that when you take out this low, there's this low here, there's a V-shaped reversal. So that was very nice to see. Yeah, pretty much the reason why I was referring to not really wanting to trade that area of demand. Let's see, USD CHF, also a pair obviously still interested in. I think this looks good for potential long. Yeah, I like this for long. Yeah, I like this for long. What can I say? It's inside daily demand. It has some daily supply inside of this buy for the sell candle, but shouldn't be too strong. Obviously, the highest probability trade will come after breaking this high over here. Then the real bullish momentum should flow in. But yeah, key level of support and resistance. The 4-hour fractal shifted over here. This to me is like a beautiful V-shaped reversal. The only thing is that there is still some liquidity resting underneath this low here. It would have been higher probability if we would have taken out that low, but I mean, depends just on how aggressive you want to be. If you want to be less aggressive, maybe just put like your entry kind of like at the 0.5 of the overall demand zone with like a wider stop loss. That's how I would trade it as well. So I would look at this. Everybody screaming about AUD/USD in the chat. Let's have a look. So AUD/USD, I literally just explained it, but again, if you need me to explain it again, wait for this 1 hour candle to close in 45 minutes. Umar, please shut up. You're really pissing me off. I'm gonna ban you. Thank you very much. Hide the user from the channel. Yes, fuck off. Thank you. Sorry for the language, guys, but it just pisses me off. So 1 hour time frame. I'm really a friendly guy, guys. I promise. On the 1 hour time frame, we need to see the bullish candle close. Because what if this 1 hour candle just like nukes back down again? Wait for another bullish fractal shift up. Wait for that to close bullish again. And then we have a nice demand zone over here. Okay. So yeah, just give it some time to develop. Yeah, just give it some time to develop. We need another 45 minutes, man, for this thing to develop. So I would say, yeah, it's better to wait for a double fractal break on AU. yeah, it would be better to wait for that, because kind of like the thing is, the only thing that I don't like about the dollar at the moment is that the 4-hour fractal is bullish, and this is kind of like your demand. I'm looking at it, and I still see some potential for some further upside, because we still have some descending highs here. So that's why I would really want to wait and see, okay, do we get like a double fractal break? Like a double fractal break for me would be enough confirmation. So that's why for AUD/USD, I would also wait, guys, before getting in. And I get a lot of questions about Aussie yen. Aussie yen is a pair that I'm not very interested in, but I do see it pushing higher for now. Yeah, Aussie yen, I see it pushing up higher for now. But I would say look more at like an AUD/CHF. Look more at like an because look, like an AUD/CHF is a nice buy in my opinion. Again, no financial bloody advice. It's inside a demand zone. So for me, it makes sense to push up higher from here, with the internal daily fractal also being bullish and us here not reacting to anything to the left. Obviously, like if you trade supply, like this is your supply zone. So yeah, I mean, it makes sense just to push up higher in my opinion. Like, what can I say? G Swiss obviously makes sense for longs in my opinion. N Swiss also makes longs make sense. However, N Swiss is a lot more choppy than an A Swiss. Hence why I would preferably be in A Swiss, I guess. But yeah, N Swiss is also nice. You said we don't have fractal structure for bullish EURUSD. I don't really understand. We have bullish 1-hour fractal. No, we don't. We are bearish on the 1-hour fractal, as you can see here on EURUSD, Julius. Friday, Furry, Frisky. When do we get the fractal structure break indicator? This week, we'll do an announcement on Discord, my friend. This week, we will do an announcement. Gold there. Yes, I know there's a lot of gold fans here in the chat. Give it up for gold. So gold, I'm only interested in buys on gold. Not really looking for any sells at the moment. To be honest, looking at the 1-hour time frame, I'm looking more at this low over here to get taken out. 32.73. Once that low is taken, then I'll be interested in some buys again, because that low reminds me of another low which we saw some while back on the 4-hour time frame, and that is this low over here. So then we also had kind of like these lows nearing it, and now we have on the 1-hour time frame these lows nearing it. So I'm looking for some more downside on gold. I think preferably kind of like want to hit this area before getting into any longs again. So that's what I would wait for on gold. CAD Swiss, looking at more upside as well on that. Makes sense with the fact that I'm looking at Swiss shorts. So yeah, I mean, CAD Swiss just had a daily bullish fractal. 4-hour time frame is very choppy, but overall looking just for more upside on CAD Swiss as well. Yeah. So yeah, yeah, that's the most important part, guys. So yeah, I want to thank everyone for tuning in. If you have any questions, make sure to join Discord. We have some really good things coming up for the Discord, guys. We have some really good stuff coming up for the Discord. So I want to thank you all for being here in the stream today. I'm going to take a quick break, refresh the head a bit before the New York session really kind of kicks off. Got a lot of reading still to do. I want to thank everybody for taking the time to be here today. I think an extremely valuable session, and definitely one that you will want to watch back. So I want to thank you for being here. Make sure to leave a like here on the stream, and I'm going to be hosting more like these if you do. It would be amazing to see at least 400 likes. Yeah, thank you again for taking the time to be here. Wish you all an amazing day, afternoon, evening, wherever you are in the world. I think an amazing session. Make sure to let us know inside Discord or here in the chat if you enjoyed it. Your comments, your messages give me the motivation to be here and show up here every single Tuesday and Thursday. Next stream is going to be on Thursday, so make sure to be there, 2:30 Central Eastern Time. As always, we stream every Thursday or every Tuesday and Thursday. So thank you all for being here. Appreciate you, and have an amazing day. And indeed, Ababukar, once a gunner, always a gunner. Next season, we are back up the arsenal. Thanks, guys, for being here, and wish you all an amazing, amazing day from wherever you are in the world. Sending love, happiness, and peace, and hope to see you inside Discord. Fabio out. Thanks. Ciao.